All right, good morning, everybody. Good evening, good afternoon. Welcome to another episode of At the Table by Urban Forex. My name is Naveen Prithyani, and today we have a topic on divergence that we're going to be talking about. And on the panel we have Lucas tuning in from Malaysia.
Hey guys, how's it going?
Hello, hello. We have Ian all the way from Australia.
Hey everybody, how's it going?
All right. And we have Armo tuning in from Thailand.
Hello, everyone.
All right. So welcome, guys. Welcome. It's good to have you guys here back on the panel. So we want to talk about a little bit about divergence today. What is divergence? Why is it so popular? It sort of defines the rules of indicators per se. It goes against what the indicator was built to do, but maybe that's why it's so fascinating that it's a rebel.
We're talking about the movie Divergent.
Not Divergent. Yeah, but I think that was all about rebellion as well, right? All right, so divergence. What are your guys' take on it, and what have you guys heard about it? Tell me a little bit about how you got into divergence, if you've ever dealt with it. How long did you fiddle with it? Do you still use it? Do you not use it anymore? What's your experience with it? So, Ian, let's start with you. What would you have to share about divergence?
Just on the support side, like just under current circumstances, it seems to be a popular topic. Like it's something that everyone talks about online and in questions and stuff. I personally, myself nowadays don't use it a whole lot, as I use price action for the most part. But I do say when I get started, like everybody else, I searched YouTube and everything, and since it's a popular topic. I did experiment with it for a bit to begin with. I think like with any indicator and those kind of strategies, I was always a bit confused, like where exactly do I draw the divergence? Because you can find it almost, if you really want to find something on the charts, you can find it, right? So, yeah. But is this the divergence or is that the divergence? And so I think there's a bit of inconsistency for me there. That's why I didn't stick with it, I guess, for myself.
Okay. Armo, for you?
I remember really well when I first heard about it, which is years and years ago. And it was when you commented in the elite community on a trade somebody else did. And you said something along the lines like, oh, nice trade. I see you applied divergence here and you did it really well. And then I asked you about it. Well, like, hey, what's divergence? And you explained it a little bit to me. And then I asked, oh, that sounds really good. That's like one of those indicators, or it's actually an indicator that's not lagging. It's one that would actually, for lack of a better word, predict the market. So then I asked, does it always work? And you were like, nope. And at that moment, I stopped looking into it because I was in that part of my journey where I'd already burned myself a little bit with relying on support and resistance every time, and it not, working for me every time, and other indicators not working for me every time. So I'd already converted to the religion of looking at charts without any indicators, like the clean charts.
Welcome to the cult.
Yes, I was a diligent, and I still am a diligent disciple of that.
Okay.
So yeah, that was my story of divergence. Very short.
Okay, fair enough. Okay, Lucas, on your end, are you still dabbling with divergence? What's your story?
I don't actually have much experience with divergent per se, but the only thing I remember in the beginning was when I was researching what divergent was. Of course, in the beginning, I wanted to learn and how to use it. So when I was researching it, it gave me a lot of confusion because I see some videos saying you use divergence with MACD, some saying you use it with stochastic, some saying you use it with RSI. Then right there on the spot, that just turned me off, and I didn't go any further than that. I guess I wasn't curious enough. But yeah. No, to answer your question now, I don't really use it that much or at all, I'd say.
Okay. Well, whenever we go online and we type in, divergence trading strategy or 5 best divergence trading techniques, whenever we get out there and we search these terms, a lot of these videos pop out. And, we have a couple of our top divergence strategies in there too. Now, but yet it's something that I personally say no to. That does it work well? I say no to, not because it's how Armo you put it that I would say no. It's because there is a better journey to take. There is a better journey to take. However, if anything, if you spend time on it, you can specialize, even becoming a trader using just moving averages. So it depends on what you want to specialize. If you actually specialize on price itself, then I would say you will understand the markets far more better, rather than using a filter in between saying, I don't care what price does, but I know how to respond based on what my indicator does. And you might become successful over time because you get more and more used to what your indicator is doing. But it's just training. It's bad training. Lucas, you're a fitness guy, right? Training bad, is it good or bad? Like, does it have wrong effects? Or, hey, training is training, doesn't matter how you do it. Is that the right way to think?
Well, like everything else, bad training creates bad habits, right?
Right.
So in a way, bad habits is not good for us.
Right. And then, comes the whole train of thought of, and you can also bring in injuries and all that stuff. So there is a level of, difficulties when it comes to divergence. But back in the day, divergence was one of my favorite things to trade. It was divergence, pivot points. These things were like top of the list for me. It's how I started my career. It's through divergence back in the day. And
how did you find out about it?
Well, I was looking into it, and it was just around the time that I was getting sick of indicators, and I started to come up with like, there's no way indicators can work. It's just not possible. It doesn't make any sense. While I went through the whole phase of going from one indicator to the next, but as I'm more of a meditation type of person, every time I kept getting this bugging me internally that says, what are you doing? It sounds like you're in a rat race that's in a big loop and just going in a circle and a circle and a circle, hopping from one indicator to the next. And that's when I started to realize, okay, let me take a step back and think about it. And I started getting sick of indicators at that point. When I looked at it, I'm like, why am I so far down the line away from price? I feel like I'm following, too many steps down the line. When I pursued my search in that's when divergence showed up. And I thought it was very fascinating that, okay, as a rebel, it's like, there we have it. Divergence is the rebel to indicators. It basically says, I work best when indicators are not showing you the right answer. I was like, oh, that's fantastic. That is absolutely amazing. So going through that process, I think, opened up the doors for divergence. So it's a lot of fun. The beauty of divergence is, if you look at it in the internet today, it's still taught incorrectly, which is very fascinating. That how it's trained, they're more focused on their terminology rather than what does it do? What is it supposed to do? What can you get out of it? We tend to bypass those questions and go straight into, how do I use it?
And the most important question, like, why does it happen in the first place?
Yes. This is what we specialize in, right? And at Urban4, everything needs to have a why. Every single thing needs to have a why. So that's that was my personal journey going into divergence and drifting away, finally diverging away from indicators. Was that the correct pun to use?
Yeah, I think so.
Yeah. So
I think we should end it right here.
All right. So now from the emails that come in from the people who ask about divergence, you guys have access to the support side. What would you say about that? How are people doing when it comes to divergence? What are the types of questions that come up? Because those of you guys who are watching or listening in live and watching us live on this podcast, we're going to turn this podcast into a webinar, as we always do. So if you're tuning in and just listening in to the recording through your podcast stations, then the link to the webinar will be below in the description. So you can always watch the webinar. So let's open that topic up. The theory of divergence. What is divergence?
I think it's where the indicator is always trying to follow what price is doing. That's essentially what an indicator does. But there are times that price moves a bit too fast or whatnot, and then the indicator doesn't keep up. So generally, that's when you'll get the divergence come in.
Okay,
Yeah.
So that's interesting, right? So that's what a divergence is. So Lucas, since you brought up the why concept, why does that happen? Like, do you have any input on that? Why does these things happen? Why isn't the indicator following what it's normally supposed to do?
I'll pass on that and let Armand go first. Let me think about it.
He's giving the ball straight to you, Armo. Okay, what do you have to say, Armo?
Didn't I just explain that I never really looked into it properly? Well, I'm gonna guess. I think it's when price goes out of bounds. Like it speeds up more than it does normally, or what the average was for a bit, and that's why the indicator cannot keep up with it.
There you go.
And that attracts the attention of people when price does something crazy, right? That creates a memory. So,
Yes.
And I think it works the same way in divergence.
Yeah, that's what I had in mind too.
Sure.
Good save, Lucas.
All right, so excellent explanation there, Lucas. All right. Well, okay, there you have it. So that's the why behind it. Now, let's go deeper into the why. Why is this important? And can we actually use this? Can this be beneficial? Like, what's the purpose of figuring out a divergence? Let's open that up.
Well, I think I think we've said this in other, podcasts and stuff, but with the right story behind the context of the divergence, I almost look at it as like an additional filter. Like, you still have to know what's going on in the chart to know this is setting up.
Yeah.
But that divergence can give you a bit of a hidden clue that maybe soon, because price will try and correct itself, because that divergence, it'll try and correct itself, I guess, basically. And if that's in line with your story, then it can be that additional filter that you can use. So
yeah, I guess like what you guys were saying, when things are imbalance, so it's either balancing out, well, not balancing out, but maybe the buyers are much more powerful than the sellers after the divergence has happened. So maybe fueling the sells on a certain push after the divergence.
Let's talk about that in a little bit more clarity, though, because some people might be tuning in and they're like, okay, I don't know what divergence is, and sounds like a weight scale, right? And what is this balance and balance out? Like, so they might be confused. So what is this supposed to do? So it's an indicator that when it does not follow price, it goes the opposite way. It is an early warning sign of prices are going to change direction.
Yeah.
Right? It's an early warning sign that prices are going to change direction. Now, the entire battle of divergence is when.
The thing that all traders are looking for, the reversal of price. You're always looking to grab that best price when it's reversing. So at the beginning of the big move, or hopefully it's a big move.
Yes.
And divergence is so popular because it's a possible early indicator of that reversal.
Yeah, it has a lot of brilliant elements into it, because if you're a divergence trader, and I'll sort of give you a idea, if prices are going steady, they're not going anywhere much. Let's say they're going sideways, then they start to incline up, which means they're going okay, they're going good. Your indicator's just behind you, pointing up as well, saying price goes up, we point up. And then out of nowhere, your price shoots up. A divergence trader might look at that and says, as per the price has gone up, but my indicator hasn't gone up. Rather, the indicator's starting to point down.
Yeah.
This is something that doesn't match. It doesn't match with what the price is doing. Hence, it forces that trader to look for a potential sell. While the average public, when they see a shooting up candle, they try to buy. So there is some really good elements to it when it comes to price action, correct price action reading that a divergence actually helps you with, that the average person doesn't understand. So if you were to get your feet wet and start somewhere, divergence is a great place to begin your journey, because it instills in you the concept of, if things go out of control, you don't follow that direction. You try to flip the direction.
Yeah, don't jump on the bandwagon when everyone else is jumping on.
Exactly. So that's one of the reasons why divergence still is very close to me, and I find it, all right, you're a divergence trader. I do not disrespect you one bit. If you're a Fibonacci trader, hold on a second. Like, I have to bring that up once every webinar. So
you
so
have
divergence.
Fibonacci assassins waiting outside your door.
Yeah, there you go. The Fibonacci cult. They will cut me up in 69.8 pieces.
But if the two of them work together, it could be a good strategy, having the 62% where the divergence happened.
Yeah, the 61.8, 62%, right? So it does work hand in hand. That's when the word confluence comes into play. Okay, so if you have like team A saying there's a divergence, get ready to sell, and then you have team B who's simply a Fibonacci guy and saying it's at 61.8%, that's why it's gonna sell, and the price actually sells, you'll have a team C that comes up and says it's working not because of divergence, not because of Fibonacci, but because of confluence of both. Yeah. And then team D might come in and says, no, the news just came out, that's why it happened. Right? So all of this is a battle between I am right, I am right, I am right. This is what trading is price moves and everyone likes to claim it and says, I called it, I called it, I called it. And that's where the elements of divergence become so interesting, is because when people say I called it, they don't want to look like they called the trade in the middle. They want to look like they called the trade at the top. Okay? That's what makes the ego flare up the best. Look at the price I got in, look where it is now. Look at where I got in, look where it is now. This is the whole concept of I must be a good trader if I'm doing it that way, but that's so far from the truth. That's so far from the truth.
Yeah, it's just ego feeding.
Yeah, and that's the journey everyone ends up taking, is finding out actually you're not supposed to catch the top or the bottom. Anyone who catches the top or the bottom adds to the fuel to help propel the trade that might come up after. Okay, yeah. Hence we call them trap traders, in the near future. Okay, and it's a whole another topic to discuss one of these days, but it's very fascinating, very, very fascinating. Okay, so going back to divergence. So we know what it is. We know why it happens. We know why do people want to use it, because it makes them sort of get an idea of the markets are going to turn. But it also has good elements. If we summarize everything, it also has good elements, right? It doesn't make you chase a trade in the wrong direction. It keeps you prepared for soon this thing will turn around. Okay. Yeah, does it always turn around?
No, it's one of the ones that indicators that actually maybe gives you an early entry, but sometimes that early entry is a little too early. You know what I mean? So it's not that it's usually it's too late, but in this case, it's kind of the reverse. So.
You know why that happens? Because at the end of the day, you are comparing price to an indicator. If the price does not reverse and it hangs around a little bit longer, the indicator will eventually catch up and be like, oh, I am pointing in the same direction. And the person who was trying to get in early, he's like, damn it, the indicator changed. It's no longer looking like a divergence. That's the problem with indicators, that they're untrustworthy. It's called repainting, right? They change direction in a split second.
You don't know till hindsight. It's hindsight when you actually know if it was divergence.
Yes.
Truly divergence.
Divergence is the best strategy in hindsight. Fibonacci is even better in hindsight. It's my favorite strategy in hindsight is Fibonacci. It looks so perfect, so perfect. Yeah. Same with SNR, right? Support and resistance. It's so beautiful when you look at it in hindsight. But when you go to draw, you're drawing all these lines. You're like, why isn't it stopping? Next line. Why isn't it stopping? What's wrong with this?
Yeah, if only hindsight can put food on the table. Oh.
Yeah, exactly. That should be a nice quote that we can get some T-shirts made from Urban Forex saying, if hindsight could put food on the table, then then we'd all be rich.
This T-shirt would be XXL instead of medium.
Yeah. So yeah, it's a very, very popular thing, divergence. So to summarize it all, is it a bad technique?
No.
No, not at all. In fact, it's one of the good ones. It can teach you the right elements of trading. Now,
I think what I like about it now, even though I've never really used it, and also I think why I didn't like it before is that it doesn't give that much information. It just gives you a hint, but it doesn't give you enough information to say, okay, the time is now. So you need to do more research, and that's probably why I didn't like it before. But that's the reason why I think it's not bad at all now. So it's like a pointer, but nothing more than that, and it forces you to do the rest of the hard work.
Yes, but is that solely linked to divergence? That feeling of it looks like it's going to go now, or is that with everything trading related?
Well, not with every indicator, but with a lot of trading related things, yes.
Yeah. Anything in trading, the moment you get started, there's this one emotion that will always come in that's going to be like, oh, that's perfect. Everything is perfect. It looks like it's now. And the whole battle of any trader is answering that question. Is it now? That's why every newbie that starts in this industry is always asking that one question: how do I get in?
I think that's what makes divergence so popular, actually, because it's pretty much entry specific. Like that's what it's focused on. It's not really has to do with anything else. So
correct. So because when we see it on hindsight and the divergence shows up, it's like, wow, it calls the top, it calls the bottom of the market. But when you go to actually trade it, you get shocked by the surprise of, yeah, but you don't know exactly when to hit it.
Yeah.
And sometimes there will be moments where you hit it, it turns around, goes against you, and the divergence disappears.
Yeah.
And you'll be the like,
or even or even you don't know where to put your stops. You know what I mean? Like you did hit the bottom, but it spikes, stops you out, then it goes, and that's a whole nother level of emotion.
Correct.
Watching it leave. So
correct. So if I was to forecast a journey of a divergence trader, is he or she will get good elements of learning how to trade well, which is trying to spin a incorrect market, trying to go the other way. That's always good, especially in Forex. The second element of that in his or her journey is he's going to open up the doors of, I'm not sure where to get in, and he's going to play with different stop losses and try wide stop losses, tight stop losses. Then he's going to introduce confluence to see my divergence works well if this and that also works well. When confluence fails, he will add in a third piece of maybe money management, saying, I'm going to start with a small size and I'll add more size and more size once it's confirmed and I know it's going.
Yeah.
And then he'll quit. And then he'll quit divergence. Okay. But by the time he quits divergence, by that point, he or she will have enough experience to be like, I don't have the indicator on my screen anymore, but I bet you there's a divergence right there.
Yeah.
You start to pick up on it. All right. So any other points you guys want to add to divergence? People listening in, they're trying to visualize this thing like, I wonder how this would look like on a chart. So I think it's very important that we drag this podcast into, turn it into a webinar so we can actually visually show it, so it makes a lot more sense. Sorry.
Yeah, it's a very visual. It's a very visual topic, so it's it's not the easiest to describe, via podcast for sure.
Absolutely, absolutely. But it's something, I'm glad we covered the theory bits of it, right? Of what makes a divergence, why do people like it? What are they looking for out of it? And then that's the question everyone's trying to answer. Okay, Lucas, anything you want to add to divergence?
Yeah, just one thing that I find generally interesting, especially when when we're discussing about indicators, and very soon after the webinar, someone's gonna drop an email asking about certain, let's say, divergent trade that that person has took, and then when I'm trying to re-explain, why the trade is correct, or let's say it's the right trade.
Right.
Generally speaking, using whatever we have learned from the MPA2 and the Iconic Traders program, using the concept there to take the trade itself without divergent alone, you can still take the same trade, sort of. And
right.
And then when you plot on the divergent using whatever indicator you're using, you automatically see sometimes, oh, there is divergent there. Just that we're not using it to begin with.
Correct.
So I think most indicators, the baseline is understanding price action, and then like any other indicators, if the price action is right, the indicator will generally point you into the right direction.
Yeah, generally or eventually.
Yeah.
Right. I mean, that's the unfortunate nature of an indicator. It's a bit slow, and many people learn about that after spending thousands and thousands of dollars trying it, and then be like, oh, it's actually slow.
Yeah.
It's like Bitcoin goes up to $200,000, and then your neighbor just shows up at your door, be like, Bitcoin will be a good purchase. You should buy it. Like, seriously? Where were you the last 2 years? Like, like obviously I could just look at the charts now, and it's obviously it's a buy. But yeah, Armo, anything you want to add? Final touches?
No, I think we've covered all of it.
Yeah. Okay, Ian, any final words?
No, I think we've kind of gone over everything. Again, I think it's a good indicator to try and to start, but like always, the story and the context of the chart is more important than anything else. So
yeah, and for those of you guys who are listening in, if I was to ask you guys a simple question about, have you dabbled with divergence? And if yes, if you can comment below, whether you're watching this on YouTube or on any podcast service. If you're just tuning in and you're listening, you can't comment, But if you can comment, I would be interested to hear, how did you dabble with divergence? How long ago? Do you still use it? And do you find it useful? That would be very interesting to see your feedbacks on them as well. So thank you guys for tuning in. Until another episode of At the Table by Urban Forex. If you guys who are listening in through the podcast, in the recording, just know that below in the description or on the side, whatever the description is, there will be a link that if you want to access the webinar and see the whole webinar, then you can do so. If there's any questions or concerns, you can always reach out to us at info@urbanforex.com. So thank you guys here on the panel, Armo, Lucas, and Ian. It's always great having you guys here. Until next time, guys.
Enjoy.
Cheers.
See you guys.
Cheers.